Good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary, Friday morning, October the 10th. Thanks for joining us this morning. Let's take a look at our trading day ahead. Overnight trade markets down 24 points in the dollar index. We talked about this chart all this week in our closing segments. We're breaking out to the upside, but pulling back in here, and we may pull back into that support area, which would be the breakout point that we had just broken through. So watch that chart very closely. May present some sort of buying opportunity there if you want to get long in the dollar index. Nat gas is softer here this morning, breaking through some initial support yesterday and targeting 310 on the charts. Crude oil down again. We've had a small bounce, and I think that's all it was. It's a small bounce. Now we're going to give way to a more additional weakness here and drop into the mid 50s. Stock market is still holding mixed throughout most of this week, and probably how we will trade through this week in the next several weeks without much in the way of bullish inputs. Steady, very choppy market. Gold and silver recovering after big drops in yesterday's values. Overnight in the corn, down 1 3/4. Beans off about 9 cents. Meal down $1.40, and the wheat is 3.5 to 4 cents weaker across the board. So let's get into these markets, start talking about the things. You can go to our website, MidwestMarketSolutions.com, sign up for free trial to our daily newsletters, our text service, and follow us on Twitter at Midwest Markets and at Brian Hoops. All right, let's talk more in detail about some of the fundamentals and news items here. Weighing on grain prices overnight, better chances of rainfall for northern Brazil and for Argentina. They have had a little bit of a dry streak, nothing urgent, but they are planting corn, soybeans, and they'll welcome some rain showers that are in the forecast. So that is one thing weighing on the grains overnight. China returned from its week-long holiday yesterday. They promptly purchased soybeans out of Brazil and Argentina for delivery in November and December. It's getting late in our marketing season for China. They normally buy U.S. soybeans during harvest, trying to time harvest lows. They haven't bought anything this year, as we know. And the fact that they're buying beans out of Brazil and Argentina, this is, kind of shortens our window for when we will sell beans to China if we're going to at all. Compared to 7 years ago, Brazil and Argentina, they're producing over 2 billion bushels more soybeans than what they did just in 2018. Last time we had some tariffs and very strong export business from China. They're really increased their production and will increase it further, and that's more of a reason to try and get some sort of an agreement with China to buy our soybeans. Harvest pressure and a lack of any bullish inputs weighing on values as the harvest progresses. Now, seasonals do turn higher for corn and soybeans. That's tendencies, not a guarantee, but a tendency to turn higher for corn and soybeans once harvest reaches that 50% mark. And we probably would do that if Monday we had a report. I believe some of the news wires will ask analysts where we stand, and we'll publish those, our best guesses for harvest data, even though we won't have any USDA information. But that's going to weigh on us going into the weekend, it looks like. But then we should see seasonals maybe start to firm up and improve. President Trump predicted China will resume buying U.S. soybeans after meeting with President Xi in a few weeks. Last year at this time, China had purchased 250 million bushels of U.S. soybeans, and their export, their marketing profile is all front-end loaded. They're going to buy during October, maybe early September, October, into late stages of October. And then after that, they don't usually do much in the way of any purchases, as they will rely on South American products. So, yeah, it certainly hurts that we don't have China in their buying right now. And that's why we need an agreement with China to get them to guarantee that they will buy U.S. products, particularly soybeans, as you just cannot rely on China and the open market. They will shun us, as South America is a cheaper producer. In the cattle market here, our week-to-date slaughter is 12,000 less than last week, 12,000 head less than last week, 30,000 head less than a year ago, and that is helping to support our box beef values. So far in the plains, we haven't seen any cash cattle trade. Bids are very hard to find, but volume should pick up today. We're going to have a little bit better volume, I think, going into the weekend. But for now, market is anticipating much stronger cash trade. These feeder cattle futures hitting contract highs, some of the deferred cattle hitting contract highs. Certainly we could have a correction going ahead of the weekend, but these corrections seem to be bought pretty aggressively by the trade. Have a good day, everyone. Good luck. And as always, we hope to talk to you soon. This has been Brian Hoops.